Welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data, including major markets news, analysis, and events, how to apply the best trading strategies prior to news being released and after. Then we will see some chart patterns and the trading opportunities at the end of the session. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. China's factory survey will give insight into the status of the slowing economic on Tuesday, September 22nd, and on Wednesday, European Central Bank President Mario Draghi will testify in Brussels as pressure mounts on the central bank to cut interest rates after the Federal's decision to stand back. The Department of Commerce in U.S. will publish the final gross domestic product figures for the second quarter of 2015. There are little changes expected to the first two versions, but any upside surprises will further dent the Federal's certainty that they made the right call by holding rates in September. The U.S. Federal Reserve was in a no-win situation if they hiked rates against the warning of the International Monetary Fund, IMF, and former Treasury Secretary Larry Summers, amongst others, or if they did not, as the Federal's credibility in the market took a huge hit as the first interest rate raise since 2006 might not happen in 2015. This week, from September 20 to 25, will highlight what was cited as major factors in delaying the rise of interest rates. Although Chief Janet Yellen argued that they did not change the Federal's view on the U.S. economy. Final gross domestic product, or GDP, will be released on Friday, September 25. This is the third and final GDP release that is published 85 days after the end of the quarter. The U.S. economy had a terrible first quarter, so all eyes were on spotting signs of a recovery. The GDP in the second quarter has exceeded expectations and is on track to record 3.7% growth. The Commerce Department revised the advanced GDP number from 3.2%, but the final number should be closer to the advanced report. Improving GDP was one of the factors the market was counting on to convince the Federal Reserve to deliver its much-awaited interest rate hike. The final GDP figures will probably have a low impact on the US dollar, as even exceeding expectations would do little to boost the currency. The citizen of Greece went to the polls for the fourth time in 3 years after all-or-nothing game of bailout and referendum that was quickly revised when Greece faced an exit from the Eurozone. has caused political fatigue with voters. I really don't see any result would affect the euro, the result of the election. European Central Bank President Draghi will testify before the European Parliament's Economic and Monetary Committee a week after the federal left rates on hold. The federal's inaction leaves the ECB under pressure and could trigger a rate cut as soon as October 10 when the monetary policy meeting takes place in Brussels. European factories have shown uneven confidence from purchasing managers. German results have been steady and no surprise from the European economy engine. But results from France have been a revelation as they have managed to exceed expectations and managed to print signs of expansion for the first time in 18 months in June, before tapering off, but still with expansion in sight. Low oil prices have pressured the Canadian economy, so Governor Paulo's words in Monday at 7:45 p.m. London time will address the central bank's view on the topic of energy and the effects of monetary policy to aid the overall growth of the economy. Economic indicators continue to paint a bleak picture of Chinese growth, cited by various central banks as one of the major factors affecting the global economy. There is little China can do to improve the narrative around its economy. The fact that transparency is still a foreign word when it comes to its economy has not helped the Chinese authorities to deal with this lack of confidence from foreigners and Chinese investors alike. The stock market sell-off is a perfect example of economic growing pains that was the result of badly handled expectations by the People's Bank of China. There is also the fact that given the state of the global economy, economic indicators have not been taken in context. China has slowed down, but then again, so has the rest of the world. The Federal Reserve pledged an end to lower rates more than 2 years ago, and still the market waits for the start of a tightening cycle. The Chinese Purchasing Manager Index (PMI) will give a view of business conditions after the record-breaking pace of the past. It is no surprise that the PMI figures have dropped into contraction at 47.1, a 6-year low, but still close to the index reading of expansion at 50. The version of this report will be published on Wednesday, September 23, will give traders a good idea of the state of Chinese factors. This week is a quiet week. We will watch only this event. Canadian core retail sales that will be released on September 23rd at 1:30 p.m. London time. Canadian core retail sales figure could be the catalyst to push Canadian dollar to the next level, especially considering the dovish tone out of the federal last week. With this week being a quiet week, I would focus on actual data and refrain from forcing a trade and the forecast for Canadian core retail sales is forecasted at 0.6%, previously 0.8%. And now how to trade this news. I am going to be looking for a deviation around 0.5% for this news. Since the forecast is at 0.6%, a reading of 0.1% would be negative for the Canadian dollar, negative at 0.1%, with deviation of 0.5%, and you will be looking to sell. However, if the opposite is true, or at least a 1.1% or better is released, I will be looking to buy Canadian dollar. So we'll buy Canadian dollar at 1.1% or better and sell at 0.1% or worse. Let's trade this release using the after news retracement method as most of the news releases. The idea is to wait for the release, then for market to spike first, immediately after the release, and then wait for a decent retracement before getting in and place your trade. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment, or the pre-news trend. We will look at the trend before the new release and we will follow it if we don't get our deviation number. We can see the chart here. It is a dollar Canadian dollar 5 minutes chart for the last release in August, during and after the new release. And because we did not get the deviation figure, that is 0.5, so the market 0.5%, the market had followed the pre-release condition and sentiment upwards. It kept going up. Now let's have a look at some chart patterns. Here chart patterns of euro dollar 4 hours chart. We can see channel up. This pattern is still in the process of forming, with possible bearish price movement towards the support at 1.12 within the next 3 days. So we can buy down option that can last for 3 days of euro dollar as duration of expiry 3 days. We can then close before expiry if it hits the support level. Channel up, and I expect the market to keep moving down. And always don't forget to close before expiry if it hits the target level. We have here on the chart of dollar yen 4 hours chart. Here we can see channel down. This pattern is still in the process of forming, with possible bullish price movement towards the resistance level at 120.99 or 121 within the next 3 days as expiry for our trade. So we can buy up or rise option that can last for 2 or 3 days as duration of expiry. We can then consider closing before expiry if the market hits this resistance level. We have here Canadian dollar Japanese yen chart, 1 hour chart. At this chart there is channel down. This pattern is still in the process of forming, with possible bullish price movement towards the resistance of 91.7 within the next 12 hours. So we can buy up or rise options that can last for 12 hours as duration of expiry. We can consider closing before expiry if the market hits the resistance level, and we will close in profit. Channel down, expect market to keep moving up the resistance level, so we can place our up trade or up option that can last for 12 hours. Swiss franc, Japanese yen, 4 hours chart. Here we can find channel up that has broken through the support line with possible bearish price movement forecast for the next 3 days towards 122.7. We can buy down or fall option that can last for 3 days as duration of expiry. We should always consider closing our profit before expiry if the market hits the target at 122.7. So then I'd like to thank you for attending today's webinar. We will hold following webinar next Monday. Goodbye and see you next time.